Let me ask you something honest. How many times have you looked at a losing trade and thought, I knew it. I saw the signs. I just didn't listen to myself. Or maybe it went the other way. You followed your setup perfectly, did everything right, and still got stopped out. And the frustration wasn't just about the money, it was something deeper, like the market was personally working against you. If that sounds familiar, I want you to stay with me for the next few minutes, because what I'm about to share is not about finding a better strategy. It's not about a new indicator or a cleaner entry. It's about something most traders never want to look at directly, because it's uncomfortable, because it points inward instead of outward. The real reason you keep losing trades is not the market. It's not bad luck. It's not even your strategy. It's your mind. And more specifically, it's a set of psychological patterns that are running silently in the background every time you sit down to trade. Patterns you didn't choose, patterns you probably don't even know are there. But they are there. And until you see them clearly, they will keep costing you. I'm saying this because I have experienced it countless times. I spent several years thinking I just needed a better system, that if I could just find the right setup, the right time frame, the right market, everything would click. And I kept losing, not because my analysis was wrong, but because my emotions was getting in the way every single time. So let's talk about what's actually causing you to keep losing. The first thing you need to understand is this. Your brain was not built for trading. Think about that for a second. Everything your mind does instinctively, the way it processes threats, the way it seeks certainty, the way it tries to protect you from pain. All of it works against you in the markets. We are wired to avoid loss, not just financially, emotionally, psychologically. Studies in behavioral psychology have shown that the pain of losing something is roughly twice as powerful as the pleasure of gaining the same thing. So, when you're in a losing trade, your brain isn't just registering a number going red on a screen. It's experiencing something closer to physical pain. And when you're in pain, your only job, according to your brain, is to make the pain stop. That's when the bad decisions happen. Not because you're stupid, not because you don't know better, but because your brain has shifted from thinking mode into survival mode. And in survival mode, logic doesn't drive the car anymore. Emotion does. This is the foundation of everything I'm about to walk you through. Now let's talk about the first psychological trap that keeps traders stuck for so long, and that is the need to be right. This one is sneaky because it disguises itself as confidence. You do your analysis, you mark your levels, you build your case for why this trade should work. And somewhere in that process, something shifts. You stop looking for a good trade. You start looking for confirmation that you're right. You start ignoring the signals that go against your bias. You hold the trade past your exit because exiting means admitting the analysis was wrong. You add to a losing position because if you're right, a bigger position means a bigger win. And being right deserves a reward. Here's what's really happening underneath all of that. Trading, for most people, becomes tied to identity. Your trade is no longer just a trade at this moment. It's a reflection of your intelligence, your skill, your worth as a trader. So losing the trade doesn't just mean losing money. It means being wrong. And being wrong feels like failure. And here's the brutal truth about that. The market doesn't know you exist. It doesn't care about your analysis. It doesn't owe you a win because you worked hard on your setup. The market moves based on the collective behavior of millions of participants, and your opinion, no matter how well reasoned, is just one data point in an ocean. The traders who survive long-term are not the ones who are right the most. They are the ones who are least attached to being right. They take a trade, they manage their risk, and if it doesn't work, they close it, learn from it, and move on. No identity attached, no ego on the line. Ask yourself honestly, when you're in a losing trade, are you making decisions based on what the market is telling you, or are you making decisions based on what you need to believe about yourself? That's the question that separates traders who grow from traders who stay stuck. The second trap is the inability to accept losses. This is connected to the first one, but it goes even deeper. Somewhere along the way, most traders develop an unconscious belief that a loss is something that should not happen, that it's a mistake, that it means something went wrong. And so when a loss comes, and it will always come, there's this internal resistance, a refusal, a negotiation. You move your stop. Just a little, just to give it more room, just this once. You hold past your exit because maybe it'll come back. It's reversed before. It could reverse again. You close half the position so you're not fully wrong. So there's still a part of the trade that could save you. These are all versions of the same thing. Your mind refusing to accept an outcome that feels unacceptable. But here's what every consistently profitable trader understands at a deep level. Losses are not failures. Losses are the cost of doing business. They are built into the math of trading. Even the best systems in the world lose a significant percentage of trades. A system with a 60% win rate, which is genuinely good, still loses 4 out of every 10 trades. If you cannot accept those losses cleanly, you will distort them. You will turn small, manageable losses into large, damaging ones. You will hold through stops. You will blow accounts not because the strategy failed, but because you could not let go. The shift that needs to happen is this. You have to stop measuring a trade's success by whether it won or lost. Start measuring it by whether you followed your process. A trade where you entered correctly, managed your risk, and got stopped out cleanly. That is a good trade. It didn't make money, but it was executed well. And good execution repeated over hundreds of trades is what builds a profitable career. When you can take a loss and genuinely feel neutral about it, not suppressed, not forced calm, actually neutral. That's when you know your relationship with trading has changed. The third trap is revenge trading. You know exactly what this looks like. You take a loss, maybe a big one, maybe a stupid one where you knew better. And there's this heat that rises in you, this urgency. You need to get it back. You need to fix it. Right now, so you jump back in. Without a setup, without a plan, just need, just urgency. And most of the time you lose again. And now you're down even more. And the heat turns into something darker. And you keep going, deeper and deeper, until the session is over and you're sitting there staring at the screen, wondering how one bad trade turned into a catastrophic day. Revenge trading is not really about the money. It's about the feeling. The loss created an emotional wound, and you're trying to heal it by winning, by proving that you're better than that loss, by restoring a version of yourself that feels competent and in control. But the market is the worst place to go looking for emotional healing. What revenge trading actually does is compound the problem, because now you're trading with 2 strikes against you. You're in an emotional state, which means your brain is not thinking clearly, and you're trading without a proper setup, which means your edge is gone. So you're essentially gambling with broken psychology. And the losses that follow are not bad luck. They are predictable. The pattern that breaks revenge trading is not willpower. It's not telling yourself to calm down. It is a pre-committed rule that removes the decision entirely. When I take a loss that hits a certain threshold, whether that's a specific dollar amount or just a trade that felt emotionally charged, I am done for the day. Not maybe done. Done. Screen off. Walk away. Because here is the thing nobody tells you. The best trade you can make after a bad loss is no trade at all. Protecting your capital and protecting your mental state in that moment is worth more than any setup you might find. The fourth trap is overtrading and FOMO. The market is always moving, and the longer you sit in front of it, the more it pulls at you. You see a candle forming and you feel like something is happening. You feel like if you don't act, you're going to miss it. So you take a trade that doesn't fully meet your criteria. Just a slight deviation. Just this one. Because it feels close enough. Because watching and not trading feels like wasting time. This is FOMO, fear of missing out, and it is one of the most expensive psychological traps in trading. Here's what's actually driving it. Most traders have a subconscious equation running in the background. More trades equal more opportunities equal more money. It feels like activity equals productivity. So sitting on your hands while the market moves feels like falling behind. But that equation is wrong. In trading, less is often more. Your edge doesn't exist in every candle. It exists in specific conditions, specific confluences, specific moments where the probability tilts meaningfully in your favor. And those moments are rare. They require patience. They require the discipline to do nothing until the moment is right. The traders I've studied who reached consistency, they all describe the same thing. Most of their trading day is waiting. It's watching. It's saying no. And when the right setup finally appears, they execute it with full confidence because they've been selective, because they haven't wasted their focus and their emotional energy on trades that didn't deserve it. Overtrading also degrades your psychology in a specific way. Every substandard trade you take chips away at your confidence, even when some of them win, because you know somewhere inside that the win was luck, not edge. And that erosion accumulates until you no longer trust yourself, until every decision feels uncertain, until you're not trading your system anymore, you're just reacting. The cure is not complicated, but it's hard to implement. Define your setup criteria so specifically that there is no gray area. Either the setup is there or it isn't, and if it isn't, there's nothing to do. The market will be open tomorrow. The setups will come again. Your only job right now is to wait. Now, let me bring all of this together because there's a thread connecting every single one of these traps. Needing to be right, inability to accept losses, revenge trading, overtrading. They all come from the same place. They come from treating trading as a reflection of who you are instead of what it actually is. A probabilistic game where your job is to execute a process, manage risk, and let the math work over time. When trading is about your identity, your intelligence, your worth, your need to feel competent, every loss is a personal attack. Every missed trade is a failure. Every bad day becomes evidence that maybe you can't do this. And that emotional weight makes objective decision-making almost impossible. The shift that changes everything is deceptively simple. You have to separate your identity from your outcomes. Your trade is not you. Your loss is not you. Your win is not you. You are the process. You are the execution. You are the discipline of showing up, following the rules, and letting the probabilities play out. That's it. When you can genuinely internalize that, when a loss lands and you feel curious instead of crushed, when you ask, did I follow my process, instead of, why does this always happen to me? That's when things start to change. Not overnight, not all at once, but trade by trade, day by day, you start building something that most traders never have. Psychological consistency. And psychological consistency is what turns a decent strategy into a profitable career. Here is what I want you to actually do with this. Not think about it. Not watch another video. Do something. After your next trading session, win, lose, or flat, sit down and answer 3 questions. 1. Did I take any trades motivated by needing to be right rather than following my setup? 2. Did I accept my losses cleanly, or did I negotiate, move stops, or hold past my rules? 3. Did I trade my plan, or did I trade my emotions at any point today? Just those 3 questions. Honest answers, written down. Because the moment you start observing your own patterns clearly, you begin to have power over them. And that self-awareness, more than any strategy, more than any indicator, more than any course, is what will finally make the difference. The market will keep moving. The setups will keep coming. The question is whether you'll be in the right mental state to execute when they do. That's the work, and it starts today.